So looking towards 2023 and maybe even 2024, what is the outlook for the short, medium term?
So look, I think if we're sitting in January at the moment, FX volatility is high. It's been high, arguably, for some time now. And really the macro environment in which we find ourselves is likely to lead to continued elevated levels of, frankly, broader macro volatility, but especially in FX. And I think if we think about the macro environment, the market is starting to price in the potential. We've talked about earlier interest rate hikes. The market's actually already pricing in the potential for interest rate cuts later in the year and early into next year, as recession probabilities increase and as the effect of monetary tightening starts to filter down into the real economy. So ultimately, what this means is uncertainty is likely to continue, in my view. And as a result, what we've seen, and what does that mean for a treasurer in FX? What we've seen is an increase in desire for corporates to want to understand and mitigate their FX exposure. Why? Because in the context of this macro, elevated macro risk, there's increased variability and uncertainty on their top lines, on their revenues.
Sure.
Right? And so given that uncertainty, the extra level of uncertainty coming from FX is something that actually they can get a handle on. Not necessarily immediately, and there's going to be some effort there, but they can do it. And so what we found in, for example, the survey that we did that we mentioned earlier, is that almost 90% of respondents who did not have a formal hedging policy in place were now considering adopting one, primarily in light of the elevated volatility environment. So, likely this is going to be a challenging 2023, but I think there is some pretty clear ways that those challenges can be tackled and addressed.